Hello, ladies and gentlemen. Thanks for tuning into Bitcoin Summer today. This is your host, Brian. Let's jump right into it. I wanted to get a couple housekeeping notes out of the way first. We are going to be releasing our node setup video later this week. We're really excited about it. We worked hard on it and we're proud of it. And it's going to be great because there are going to be a couple troubleshooting things in there if you're having trouble setting up your node, the troubles that I had while setting mine up. And I explain those in detail, and look for that on the YouTube page. Also, I released a couple days ago my essay on the energy discussion, the FUD that's coming out involving Bitcoin's energy use and how bogus those studies are that came out that said that Bitcoin's going to boil the oceans. So please check that out on the website, and be on the lookout for. I did a valuation of AMC, GameStop, and my valuation of Bitcoin. Now, these are quick and dirty, simple valuations. I don't make any of my investment decisions based upon what I'm going to be showing you, but it's my quick and dirty way of getting assets onto my radar. So I take the most simple view, and if it looks intriguing, then I can spend more time and my energy on studying this company or this asset or commodity or whatever it is. It is not my determination of whether I'm going to be involved in it, but it is a determination of whether I'm going to study it, because studying is the number one key to a successful investment. You cannot be in something you do not want to be involved in an asset, across any asset, if you don't know anything about it. You need to be an expert in that. And if you're not, then just go and buy the S&P 500 ETF and call it a day. You're going to do just fine. Trust me, you're going to do just fine. Dollar cost average the S&P 500, you'll be okay. But if you're interested in picking stocks or picking assets, and in my case, picking Bitcoin, because that's what I landed on, and it's the best asset, in my opinion, that there ever was, and it's the biggest lopsided risk to reward trade that you'll ever see. So let's jump into what I'm talking about. And if you are not watching the YouTube video right now, you can follow along on that. I'm not going to be doing anything crazy, so don't worry about it if you're just listening to the podcast. But I just wanted to show you this visualization. I wanted to explain what we're going to be talking about on the show today, and we're going to be talking about market cap. Jay, my producer, had a question for me about what is a market cap, and I'm so glad that I have him a part of the show, because sometimes I talk over people, and I forget that not everyone has the same amount of years of research that I do on the subject of investing. People have their lives. I do not. This is my life. So I'm so glad he asked the question, because I wouldn't have even thought about doing an episode on market cap. And we had gotten this really long conversation about how you can value companies based on market cap, how you can use it to your advantage. It is a limited metric, but it can be helpful if you're doing these quick and dirty valuations, which is why I wanted to write up this blog post coming out later. So it was such a long conversation that we broke it up into two parts. You're hearing right now the first part, and the next part will be out on Sunday. So check that out as well, part 2 of our market cap discussion. So immediately when we were talking together during our discussion about market cap, I wanted to pull up this because I love this visualization right here. Again, if you're listening on the podcast, just bear with me. It's not going to get crazy. As you can see, the stocks that have gone over $1 trillion market cap reached it within decades. And that's a long time for a company to be around. That's a long time to take to get to that milestone. And of course, they're only tech companies that have reached that milestone. There's one other big oil conglomerate, Saudi Aramco, that is in that realm as well, but these are American companies. And Bitcoin only took 12 years, so just over a decade. And that, from that angle, just the market cap angle, it just shows you the level of adoption that Bitcoin has had and the level of success that it's had, kind of quietly, even though it's all a buzz, and CNBC is talking about it, and it really is kind of in the zeitgeist now. But it amassed $1 trillion in market cap in 12 years, and that's an amazing feat. So I'm really excited about this conversation, and let's just jump into a couple news items before we get into the episode. And this is something that I found completely interesting, but I don't know how useful it's going to be, but let me just share it with you. And I'm sure a lot of you have seen it, but the oldest bank in America, Bank of New York, and they merged with Mellon a while ago. So now it's a huge, banking conglomerate. Oldest bank in America. They are partnering now with Grayscale. Grayscale is the company that has the GBTC, the trust. They have talked recently about putting their hat into the ring as far as getting their trust converted into an ETF, which would definitely help the discount that GBTC trades at right now. So what GBTC is worth as far as the Bitcoins that they hold, it's trading below that right now, and that's called below the NAV, the net asset value. And if it trades below, it's traded at a premium for many, many years because it was kind of the only way for institutions to get into Bitcoin, even legally. They could just buy the trust. It works kind of like an ETF. You just have the shares, but it's a little bit more complicated as far as how many Bitcoin they can release onto the market and how many they need to keep on their balance sheet. It's not a one-to-one thing. So long story short on the difference between the ETF and the benefit that would be for Grayscale is they're the only game in town as far as the U.S. market right now. So they're able to charge this exorbitant 2% management fee. So just for you holding GBTC, you're paying them 2%. And ETFs are quite a bit lower as far as management fees go. So not only would this be good for the market for the SEC to approve an ETF for Bitcoin, but it would go a long way to approve the GBTC ETF because they hold, out of any of the ETFs around the world that hold Bitcoin, they hold the most by far. And it would just be an easy convert to the people that hold the Grayscale trust to convert that into the ETF. Now, I don't know if they have even filed for that yet to convert it, but this is looking like it's getting more and more serious. And I don't know how serious this is, but if they're partnering up with a very entrenched bank, then I think it's a very good sign that they've gotten signals from the SEC. And this is just another signal for them to it's kind of like a beacon to the SEC, like, hey, we are dead serious about this. We are going to do this. We're going to do this the right way, and we're going to make sure people are protected. And it's just it's all a load of posturing. It's all basically just PR because the SEC has approved the craziest, the most volatile and horrible assets that you can own. I mean, you can get a triple leveraged inversed oil ETF, but you can't buy straight up Bitcoin, which is the most free and fair market that there ever was. But you can get a triple leveraged oil ETF. And it's just like, you can get a, 2x, 3x leveraged S&P 500 ETF, but you can't get a 1x leveraged Bitcoin ETF. It's all posturing. They're just dragging their feet on it. To me, this does seem like we're moving in the right direction. Now, I'm not saying that ETF is going to be approved in 2021. We'll see. But I think very, very possibly that we'll see one early 2022 at the latest. And it's just a matter of time. It's not if, it's when. This came out right around the same time, and this is why I'm kind of stacking the info here, and I'm starting to build a clearer picture of this. They become an SEC reporting company, and this article is obviously skewed, but they do pose a good question here: are they going to be a step closer to becoming a ETF? Now, none of this news has moved the market whatsoever. We kind of are still in that swirl of no good news is good enough. And in fact, it seems like sometimes it just, it drops the price. But this is a big milestone. I agree with them. They have become an SEC reporting company, and that has brought them a step closer to the SEC. And when you're in bed with these people, they are just far more likely to break bread with you. And I just think this is another sign that we're going to be seeing an SEC approval of Bitcoin ETF sooner rather than later. Again, I don't know if it's going to be 2021, but we'll find out. I hope so, but we'll see. Let's just take a look at the mempool today. Difficulty adjustment is looking like it's not going to be as crazy, but we are going to be coming up on it shortly here. So we're getting a little bit busier today. It's not crazy, but it's a little bit busier today. And we are, the network's humming along. So everything's looking good on this end. So I wanted to keep updating us on the difficulty and the hash rate. So as I showed you the graph before, I thought I changed this color so it's easier for you to see. Let's get that. There we go. All right, I hope you can see that better. So as you can see, as we were in the bull market here, as we were in our rise, this was COVID. So you see during COVID, the hash rate drops quite a bit below the difficulty adjustment, but it kind of bounces off of it in a way. It stays in this range. It's very volatile. It's a bounce. It's like a heart rate monitor. And you can see here, it doesn't usually spend a ton of time below it, but this is definitely a long time below it. And I think they'll start moving in tandem up again this way. As you can see, it's kind of the hash rate trend is kind of signaling that difficulty adjustment is going to stop adjusting downwards, and we're going to start seeing both of them move in tandem upwards. That's my prediction. I could be wrong, but I just think we can't go much lower than this, as I've stated before on this show. We haven't seen this level since July of 2019. So it's just, to me, it's pretty clear that miners are getting back online that have left China, have been forced to leave China. And they are actually in accumulation phase right now. So to me, it's just a clear indication that we have hit bottom with hash rate, and we're going to start getting a much stronger Bitcoin network. Even with a huge drop in hash rate, we are still 100% uptime. The network has not suffered whatsoever, and we are only going to come out of this stronger. It's like a healing scar. So I wanted to talk about, since we're going to be talking about valuation today, and this is going to be a theme for the next couple weeks. When we're talking about valuation, you want to look at many different metrics. You want to look at different multiples, different metrics, and if you can pinpoint a price target where you would want to buy, that's the best way to do it, because you're looking at it from a bunch of different angles. Not one alone is going to be a clear picture for you of where you might want to buy or what it's worth. But I find this one really interesting, the Mayer multiple. Mayer multiple has historically been higher than today's value 89% of the time. So what does that mean? The Mayer multiple is a multiple of the price over the 200-day moving average. And that's just a fancy way of saying you're smoothing out the price movements with the 200-day moving average, and then you're comparing today's price with that. So that's just a simple way to put it. We're at 0.73, and historically the Mayer multiple sits in the history of Bitcoin. The Mayer multiple has been sitting at 1.44. So that's almost exactly half. What that signifies to me is we're almost half of what the value market, if you're looking on a moving average basis, which is a very, like I said, with market cap, it's a very simple metric. But when you put these together and you start pinpointing your price targets or your valuation targets, that gives you a clearer picture. And I'll let you know what my value is of Bitcoin. My value is of AMC, my value of GameStop. I will let you guys know what that is in a blog post and a subsequent episode. Jay and I will be recording that actually tonight. So we're excited. Be looking out for that soon. But let's wrap it up there and get right into the episode. As I said, we're going to be talking about market cap today, and it's a two-parter, so listen to this episode and make sure you subscribe so you're going to be getting the second episode on Sunday. Thanks for joining us today, and we'll talk to you guys later. Enjoy the episode.